Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Hi, everyone. Welcome to the Bloomberg Businessweek Weekend podcast. This week, Nvidia earnings, more talk about tariffs and onshoring, and the latest read on U.S. inflation. Another busy week. It was a holiday-shortened trading week. For the latest on all of it, head over to Bloomberg.com.
With that as our backdrop, we share a bit of our Nvidia earnings reaction, courtesy of our own Ed Ludlow, after his sit-down with Nvidia CEO Jensen Huang. The stock rallied after the report. More on that in just a moment.
Plus, later this hour, why tariffs alone are not enough to reindustrialize America. So argues the CEO of Speculative Technologies. Plus, the small Asian nation poised to win nuclear energy's $9 trillion comeback.
And it's been 6 years since the murder of George Floyd. Have we seen any progress since then? The president of the Urban League stops by in our second hour with a reality check and, interestingly enough, his thoughts on the U.S. Steel and Nippon Steel tie-up.
All of that to come. We begin with what was probably safe to say, the top tech, the top AI, earnings, market, investment, and business story of the week, all rolled into one. And by that we mean earnings from the world's largest semiconductor company, Nvidia. After the company's earnings call, CEO Jensen Huang sat down with Bloomberg Technology co-host Ed Ludlow to talk about the results. Bloomberg News senior semiconductor and networking reporter Ian King joined us with more.
Ian, I just want to get a clear understanding from you about where exactly Nvidia made up for concern around China, because that was a big question moving in to the earnings. And then also with regard to the restrictions that have been placed on the company by the Trump administration with regard to the H20 chip. Where did Nvidia make up for this?
Yeah, no, you're asking the right question here. In many respects, it was a kind of a bizarre announcement and reaction. They said, look, things in China were worse than you thought, right? And are going to continue to be worse than you thought. We're going to lose $8 billion of revenue from China. So clearly, well, but why aren't your earnings that bad then? And the answer was, because everything else is good, right? Networking came back. That had been a slightly weak spot a quarter ago. The new Blackwell range-based products, getting more supply of that. Things are going a lot better there. Demand is really going very well. And they talked about the spread of their technology into the enterprise, to robotics, to automotive, but that was a bit more sort of longer term. The bottom line here is that the big spenders on this technology, the Microsofts, the Amazons, are still spending.
Thank God, right, for the hyperscalers. Ian, is it broadening out, though, beyond that? I think there was a lot of wondering about the tier 2 companies, the sovereign play here, which provides potential, lots of potential, maybe for Nvidia going forward. Do we get anything on that?
Yeah, in a word, no. We got plenty on it, but it's not broadening out. 50% of their data center business was still these so-called hyperscalers. I mean, they talked a lot about it broadening out and finding its way into other parts of the economy. And I guess you could say that, well, maybe enterprises, the corporations, governments, service providers are using more of the cloud services so that the use of AI is broadening. But in terms of the revenue makeup, that's still very solidly going to these so-called hyperscalers. And I think long-term investors want to see that 50% ratio go considerably lower to have a real assurance that everybody's putting this gear in their own data centers and their own nationalized, centers before they'll become more comfortable with that idea.
I'm curious if, in your view, Nvidia's moat when it comes to the technology that it has is getting any more shallow right now, or if it's getting deeper. We did speak in our coverage to some folks who reminded us that a company such as Alphabet's Google is creating their own technology that helps them rely less on a company such as Nvidia. How is Nvidia's moat right now?
A couple of ways to look at it. The numbers would indicate that nobody's even getting close, right? It's outgrowing everybody. I mean, the revenue it gave up in China is more than the total revenue for AMD, which is purportedly its nearest competitor, right? So scale-wise, forget about it, right? But part of that interview, what Jensen said was, look, Huawei, which is the Chinese technology company that the US government has gone to great lengths to kind of lock out of the world, is fielding a chip now which is pretty much as good as our H200. And you'll remember, up until earlier this year, H200 was the best thing that Nvidia had. So he was cautioning that, our absence in China is actually fueling competition there, and they are doing a lot better than you thought they were doing.
Well, so help me understand, because I thought when these headlines, I'm trying to understand. They are saying that they're considering trying to design a new chip for the Chinese market. As we know, the administration has, kind of slowed some of certainly the more sophisticated chips. At the same time, executives, from what we understand from the conference call at Nvidia, are spending a lot of time reaching out to the government to lift some of these restrictions. So help me understand. Does it sound like Nvidia expects that China will reopen? Or I don't know, I'm just trying to understand if that is going to be, more of a healthier revenue stream for them going forward.
Yeah, so that was a very, that's the right question that everybody is asking, and it was asked explicitly and implicitly in a number of ways on the conference call. Mm-hmm. What Nvidia said was, look, sure, we'd like to have another solution. We'd like to go back to doing what we did, which was find a way to get a chip that does not trigger these restrictions. But frankly, these restrictions are so stringent at this point. Is there a point in doing that? Is there a way that we can do this technically and have a chip in China, which the Chinese want, and doesn't raise the ire of our government? And they thought they'd done that with the H20, and they thought that perhaps the Trump administration might take a different line to the Biden administration, but they didn't. They doubled down on that policy, and they said, no, you can't even have the H20, which is, a weakling younger brother of the H200 we just talked about. So is there any point was part of what the question, part of the answer that they gave.
Ian, in your view, and maybe not in your view, but in the view of some of the folks you speak to when you're doing your reporting, does a restriction such as this actually help push China to develop its own technology?
I mean, it already has done, right? I mean, Jensen said that. I mean, you could argue it's in his interest to create a scare that would persuade people to come to his point of view. But there's no denying that there are large-scale deployments now of Huawei chips.
Hey, real quickly before we go, out there, Republican Senator Jim Banks and Democrat Elizabeth Warren are demanding answers from Jensen Huang on Nvidia's plans to actually open up a research facility in Shanghai. And they are, of course, citing national security and economic security concerns. Should we be scratching our head on that, considering the backdrop between U.S. and China right now?
Yeah, I mean, I don't want to be rude about our competition, but they perhaps need to work a little bit harder on that one. Nvidia, this is already asked and answered. This is a new office, an office to help people to return to work. Nvidia has said publicly nothing to do with a research and design center, and so perhaps those politicians better not read everything that is written out there. Perhaps they want to check on the reporting.
That was Bloomberg News senior semiconductor and networking reporter Ian King.
Okay, while the street and many investors are still very bullish on Nvidia, I mean, just check out what the share price did right after the earnings release. We also got the bear case from someone on the street. We're talking about Jay Goldberg. He's senior analyst, covers semiconductors and electronics over at Seaport Research Partners. He's the only analyst on the Bloomberg terminal who has a sell rating on Nvidia.
My take is that Nvidia, the most scrutinized company on the planet, we all have a pretty good sense of what their numbers should look like this year, what their capacity is. Working backwards from that, there's not a lot of room left for upside, right? There's a few things here and there, but there's not much upside possible. But on the downside, there's still a lot of risks. There are a lot of things that could go wrong. There's lots of problems with the supply chain. The fact that they keep mentioning that Blackwell is ramping, that was in doubt for a while. There's just a lot of questions. The company it's a good company. It's well run. It's just gotten so big so quickly. I don't think they can keep the level of expectations beating that they've had for the last 3 years. That just can't keep going. And I think the headwinds are continuing to mount.
In the earnings statement, Nvidia CEO Jensen Huang saying global demand for Nvidia's AI infrastructure is incredibly strong. AI inference token generation has surged tenfold in just 1 year. And as AI agents become mainstream, the demand for AI computing will accelerate. Jay, obviously sounds upbeat, but again, this is where we want to have some numbers around things. The CFO saying sales of their H20 products, $4.6 billion for the first quarter of 2026. Is there anything that could kind of make you say, well, wait a minute, maybe I need to say it's not a sell. Maybe there is something interesting here.
So I think the underlying question is, what are we going to do with AI? Like, there's a lot of excitement around AI, but it's still in very early stages. I like to think of this as the internet in the 1970s. We knew it was something, but we didn't know what it would become. I think that's where we are with AI now. And I think it's going to take a few years for us to really, as an industry, figure out what the actual consumer use cases and applications are. And in that process, there's going to be some fits and starts. And I just don't think we can keep this momentum going forever. I know demand is good now, but we start to look into next year. I think people are starting to ask good questions about what is the ROI on these massive GPU investments all the hyperscalers and the enterprises have made. And I don't think we've seen those yet. I think what would sort of alter my belief is if somebody invents some incredible consumer application for AI that would radically accelerate things.
That was Jay Goldberg, senior analyst on semiconductors and electronics at Seaport Research Partners. Once again, the only analyst on the terminal who's got a sell rating on Nvidia.
And sticking to it, at least so far.
Hey, he likes being a contrarian, he told us.
Yeah, he had some really good thoughts kind of on AI more broadly, too. All right, coming up, why tariffs will not lead to an American manufacturing revival. So argues our next guest.
This is Bloomberg.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
This past week, some legal back and forth on President Trump's tariff push. The latest, as we put this week's Business Week to bed, was a federal appeals court that temporarily blocked a ruling that threatened to throw out the bulk of President Trump's tariff agenda, giving the White House hope to continue its efforts to rewrite the global trading order. Now, for the latest, head on over to Bloomberg.com as it continues to be a developing story. Now, keep in mind, part of the president's justification is to get more companies to produce in the United States, invest in the United States, and grow domestic manufacturing. And to be fair, Tim, we heard from a lot of companies, global companies, about investing in the U.S., or at least plans to do so and ramp up their exposure here.
When you think about the history of American manufacturing, it was actually at its peak just ahead of the financial crisis. But as Dan Wang, a research fellow at Stanford University's Hoover History Lab, and Ben Reinhart, the CEO of the nonprofit industrial research lab Speculative Technologies, write in the June issue of Bloomberg Businessweek magazine, American industry has certainly seen better days and it's never recovered to those levels. They argue, though, that tariffs are not the solution to revitalizing the sector. Ben, you have a tariff-free menu of policies that offer a sure path to revitalizing U.S. manufacturing, you and Dan write. Before we get there, explain for everybody what an industrial research lab is.
Well, so I like to describe it as we're a research lab in the sense that we are working on trying to create new technologies. We're not working on products, but at the same time, we're trying to do research that is not just trying to discover the secrets of the universe, but really build useful technologies. So that's sort of the line I like to think that we're walking, where it's like we're doing stuff that doesn't make sense yet as a company. I wouldn't go to an investor and say you can make a bunch of money, but we are nevertheless like trying to do things that eventually will become useful. So think Bell Labs, Xerox PARC, that sort of work.
Very cool. So sort of a Skunk Works type of thing.
Exactly.
Pre-product. Okay. You and Dan have been thinking a lot about tariffs and the way that the president has been trying to revitalize American manufacturing. His love for tariffs is no secret. We've known about it for many, many decades, but I think perhaps it caught some investors off guard back in April when he announced the reciprocal tariffs on so-called Liberation Day. You argue that there are better ways to revive manufacturing in the U.S. You say we should look at what China has done.
Yeah, so there are two things in particular that they've done. So they've done many things. Some of them we don't think that we should copy, but there are two in particular that I think are particularly worth looking at. One of them is inviting in foreign investment, right? So actually, one of the ways that they built up their manufacturing is by inviting in foreign companies and getting them to build factories there, and sort of regardless of your position on stealing technology, you still build up a workforce that knows how to build those things and then can go and build that technology. So you can imagine inviting in Chinese companies even who have now technologies that we don't have, and you then build up a workforce who knows how to, say, make batteries. So that's one. Two is like industrial zones, right? So you're the most well known is Shenzhen, but there are many others where to a large extent the government took a very like hands-off approach and just said like, okay, like within this zone you can basically do whatever you want. There's a lot of nuance to that, but right now it is extremely hard to build new factories.
I do want to push back a little bit on this. My one experience in China back in 2019, before the pandemic, I went to Shanghai. I know it's a completely different place now, but one thing that struck me was when the plane landed, I looked out the window and it was what I thought was the thickest fog. It turned out it was pollution. My throat was sore the entire time I was there. We couldn't see out of our hotel room windows because we were on like the 15th floor and the air was too clogged with pollution as a result of some of the industrialization that we're talking about here. Do we really want that in the US?
I don't think it's an either or sort of thing. A lot of modern manufacturing technologies no longer produce that sort of waste. And a lot of the manufacturing that we're talking about doesn't do that. And there are many technologies for cleaning that up. So you were seeing sort of the result of manufacturing technologies from like the 50s and 60s. And so we're saying like, okay, we're going to build technologies of the 21st century, which have many fewer side effects.
Ben, I got to say what's really cool is our Steve Mann of our Bloomberg Intelligence team and covers the auto sector. And one of the things he has said recently to us, because as we think about tariffs and bringing manufacturing back home, he said one thing that China learned, I mean, by doing all that manufacturing, they actually developed some very sophisticated technology that is now helping them to kind of operate on a higher plane, and whether it's develop car, like whatever have you. And I never thought about that. I guess I thought about bringing manufacturing back home. Do we really want to be making T-shirts and sneakers? But that's not what it's about. It's about they've become very sophisticated with technology because of the automation and all of the manufacturing they've been doing.
Oh, yeah. Couldn't agree more. Manufacturing and new technology and research really go hand in hand. You can't have one without another. Honestly, that's one of the reasons why I'm such a big proponent of manufacturing.
But I don't think we always put that together.
Yeah. It's like the best technologies, the best research comes from noticing a problem in an actual manufacturing line, right? Like going back to us being an industrial research lab, the point is to notice, there's this actual real problem in the world and we need to do research to fix it.
I think it's pretty wild. So is President Trump right in terms of encouraging companies outside the United States, even American companies, to start investing more here?
Along that axis, yes. I think I will not unequivocally agree with everything.
But in encouraging foreign, and as many have said to us, there are commitments, and then you'll see whether or not those commitments, which are often multi-year commitments, and also you can't just build a factory overnight, right, or a facility, but we'll see over time whether or not this actually happens.
Yeah, I think so. I think that it would ideally be done with carrots and not sticks. But yes, I think that
the message, right, but maybe not the mode.
Yeah, exactly.
Is at least your view. Yeah.
Okay, so that's one way to be thinking about this. Study China. I want to talk a little bit about some other solutions that you have. Preserving the strengths that America already has. Talk a little bit about what you mean by that.
Yeah, so America has a lot of strengths that I feel like literally today we are sort of throwing away, right? Like we have this amazing ability to attract talent from all over the world, and
if the universities let them in.
Yeah, exactly. And the universities and immigration, right? Like, so historically,
in all seriousness, I'm not bringing that up facetiously. I'm saying that is at risk right now, given the different rules that we've seen.
Oh yeah, exactly. And so our point is don't stop that is really, and that is a unique strength of ours, right? Like China doesn't attract global talent in the same way that we do. And again, in our university and research system, also, you've seen the cuts to NSF and NIH and NASA, and the list goes on. And our research ecosystem is the envy of the world, and we should keep that the case.
What do you say to folks who say, listen, okay, you've got something like an Ivy League that has an incredibly large endowment. So why does the government, U.S. government, need to give them money to do R&D? So what's the argument to that? Why, or if you're going to give it to maybe another organization that needs it more? Like, what's the argument for continuing for federal money to go to some of these massive, well-known institutions, academic institutions?
Yeah. So there's a lot of nuance that we can't get into here. I think that they're rethinking where the money, where government R&D money goes. Yeah. Definitely another conversation for another time. But just as things stand now, the money should go to the best researchers. The best research is going to come from the best research. Research is very much a power law distributed thing. Mm-hmm. And for better or for worse, the best researchers are at places like Harvard. And so that would be my argument for it.
Ben, what do you see the risks to U.S. manufacturing or to the U.S. economy if the United States continues with this tariff program?
I mean, I see just U.S. manufacturing, it's not going to necessarily make manufacturing better, right? I don't think it's actually going to achieve the aims. You see, because so many of the parts that manufacturers depend on are coming from overseas and are being heavily tariffed. And so you're already seeing manufacturers of CNC machines mm-hmm. getting completely hosed by the tariffs. And so I just see manufacturing as an industry being directly hurt by it, let alone not helped.
Yeah, I think it's kind of, who knows where this goes, right? Ultimately. But I think understanding the impact that immigrants or immigration and bringing folks in from other countries, whether it's in high skilled or low skilled jobs, has an economic impact, right? And it pays off in many different ways, or tends to.
Absolutely. I mean, you just I interact with a lot of researchers. You look at who is getting STEM PhDs, who's doing research in hard science and technology, and it's the vast majority of people are not from the U.S.
How do you think about all of this with something that is going to be obviously a big deal? And I'm thinking about artificial intelligence, and I think about DeepSeek. And when that news came out, we all were like, oh. China they're moving ahead. Yeah.
I think the argument is across all of it, right? You want, ideally, it would be great for some of the people who developed DeepSeek to want to come to the U.S. and do work here. Right. And again, you look at who is actually working at these AI companies, and there's people from all across the world. I have friends there. And people who came up with a lot of the algorithms that the U.S. AI companies are using are not American. And so again, this is just example after example of our strength is our ability to pull in these talented people.
30 seconds. Are you optimistic or pessimistic that some of this stuff will be adopted?
I am pessimistic, but I am optimistic that can change.
But if we don't get this right, big deal.
Big deal.
Meaning the U.S. economy, meaning U.S. role in the world, or what?
Yeah, I think all of the above. I think that you could really see us honestly on some kind of decline, some kind of becoming like Ming China or Japan after they close themselves off.
We're gonna leave it on that though. I'm sure we'll come back to you.
Definitely.
Certainly something to get us all thinking. Ben Reinhart, he's Bloomberg Businessweek contributing writer and CEO of Speculative Technologies.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
All right, so we've talked a lot about the booming demand for electricity in the United States, power, and the need to seek alternative sources of energy. One solution policymakers from both sides of the aisle continue to look at, I feel like the world is all looking at it. We're talking about nuclear.
Bloomberg reported last year that then President Joe Biden laid out plans to triple nuclear power capacity by 2050. Then a few weeks back, President Trump signed an order meant to quadruple U.S. nuclear capacity, with plans to get 10 large reactors under construction by 2030. Needless to say, the U.S. is really trying to get its nuclear groove back.
And with that, a surge in demand for nuclear reactor equipment. That stands to benefit one East Asian nation. And folks, nope, it's not China, not Japan, not Russia, but rather the small country of
South Korea. Writing all this for Bloomberg Businessweek is Bloomberg News energy reporter Will Wade. He toured South Korean nuclear manufacturing plants while on assignment in Asia earlier this year. He joined me alongside Emily Griffeo.
Yeah, they sent me to Tokyo for 3 months. It was a job swap program at Bloomberg. I highly recommend it if you get the opportunity. But I also did spend a week reporting all up and down South Korea to see their nuclear industry, and that's what we wrote about for this story.
Yeah, you and the team crunched the numbers. So a Bloomberg Businessweek analysis of the more than 400 planned and proposed nuclear reactors around the world show that South Korea is positioned to win business with as many as 43% of them. So it sets the country up, you and the team, right?
Yes.
To become one of the biggest exporters of atomic tech over the next decade. Why is South Korea doing this so well?
So the thing about South Korea is they built their first reactor in the 70s. They've got 26 now. They just never stopped building them. They've been doing this for decades nonstop. I mean, you think about nuclear, you probably think about the U.S. because we invented it. We have more reactors here than anyone else.
We do.
We do, yeah. Well, for a little bit. China's going to pass us probably by 2030.
Wait, more operating reactors?
More
like currently operating
reactors.
reactors.
Yeah.
Wow.
Yeah. And also, you might think about France. It's the most nuclear-powered country on Earth. They get like 70% of their power from electricity. But in the U.S., the industry pretty much just stopped after 3 Mile Island in 79. We lost that expertise of building power plants. France, similar story. After Chernobyl, there was a lot of public opposition to nuclear power. They also kind of halted the industry for a while, and it's tough to come back once you stop that. Meanwhile, Korea just kept building them and building them and building them. They only were building them in Korea, but they've got that expertise. They just never stopped the industry. And then about 2009, they won this huge contract to do 4 reactors in the United Arab Emirates. And they did it. They did it on time. They did it on budget. Meanwhile, here in the U.S., we finally finished a new project last year. It was like massively over budget, massively late. France just opened a new reactor last year. Massively late, massively over budget. They're doing one in England, massively late, massively over budget.
I'm sensing a theme here.
It's a theme. And meanwhile, people are like, wait, who did that project in the UAE? Who pulled that off nicely? The South Koreans? So now they're getting a lot of attention. They just got awarded a contract last year in the Czech Republic. It's not finalized yet, so it's not a done deal. But when the Czechs looked around, they're all like, let's go with the Koreans. Everyone thought the French were going to get the deal, but nope, they went with the Koreans because they've got this reputation for just doing it right these days.
So what we're mainly talking about, most of the business is manufacturing the parts for reactors in South Korea and then they export them to other countries?
No, we're talking about...
Or they're also building plants that are stationed in South Korea.
That's another part of the whole thing. We're talking about everything. They manufacture the parts in South Korea. They got companies that build them wherever in Korea, in the UAE, in the Czech Republic. They got their own homegrown design now. So it's really beginning to end. Everyone in Korea works together. They call it the Team Korea approach.
Mm-hmm. Do you think we're going to, here in the U.S., start using
Team America?
Yeah, well, I mean, if they can do it under budget and on time, or on budget and on time, and we can't, can we outsource this? Can companies in the U.S.
hire the Koreans to do it here?
Yeah. Like, how are they doing projects for the Czech Republic? How are they doing projects for other countries?
You know, like the whole export industry for nuclear is a big thing. I mean, the Americans are trying to export American technology around the world. The French, everybody wants it. It's not just a company selling things. It's a diplomatic thing. It's a decades-long relationship with servicing and fueling. So it really is a diplomatic relationship to get into business doing nuclear power for companies. So that's why we're starting to see less Russian and Chinese in other parts of the world. They're a little reluctant to work with them. And the Koreans, they're kind of seen as like more neutral.
I feel like I have to ask, the next natural question would be about tariffs, and potentially the United States is pushed towards de-globalization. Does that impact the nuclear supply chain at all? And is that an issue for South Korea or not as much?
It's not so much an issue when South Korea wants to do business with anyone but the U.S. I did talk to a company there that's working on a project here, and they told us, it's going to make that project in Michigan more expensive. It's going to make electricity more expensive for Michigan people because the parts are coming from Korea.
Emily was talking a little bit earlier about, in this story, the supply chain and this network effect of being able to effectively build these reactors in Korea. What allows the country to do this? Like, what are they doing right?
They collaborate really well. And it starts at the top.
What do you attribute that to, though? Is it organizational? Is it cultural? Is it based on a history of the way that companies have worked together?
I think it's kind of all of that. I think there's some cultural things. I think partly it's, they have the chaebols, these huge conglomerates that make everything.
Like a Samsung, for example.
Samsung, LG, Hyundai actually is the company that I docked to a couple of different units of Hyundai here. So they're used to sort of all being the same corporate umbrella, even if they're different companies. And there's not that many of them, so they've been working together for decades. I think it maybe helped that it's a smaller country.
That's true.
It's easier to manage things.
The United States is quite large. I just did a transatlantic flight. It was long. You were actually in South Korea.
Yeah.
How close did you get to the manufacturing plant? Did you go inside?
I went.
You're not glowing, so that's a good sign.
Well, I went to this factory in Changwon. It's this all the way down on the south. It's near Busan, and we went to this factory. It's operated by a company called Doosan, and they've got this thing that's called a forging press, where they take red hot chunks of glowing steel and just pound them into shape, and they use this to make the big reactor vessels for nuclear power plants, but they do everything else. I mean, when I was there, they were making the propeller shaft for a cargo ship, and it must have been like 4 feet wide and like maybe 50 meters long, and it was red hot glowing steel, like 1,000 degrees. I could feel the heat from 50 feet away in another room through an observation glass.
Wow.
And they're just pressing on it with like hundreds of thousands of tons of pressure.
Will, I mentioned that you were in Japan for the last 3 months.
Yeah.
Let's talk a little bit about that and the state of nuclear power in Japan. I think people, at least, of a certain age, might think of nuclear power in Japan and think immediately of Fukushima.
Sure.
But what is the state of nuclear power, nuclear energy in the country?
So the story in starting after 2012, right after the 2011 Fukushima disaster, was very simple. No nuclear power. They used to get about a third of their electricity from nuclear, and after that disaster, they shut all of it down, which was really kind of a problem for their electricity system. They've gradually been restarting them. I think they have about 14 up and running now. They're working toward restart some of the others, but as you pointed out, there's strong public opposition. Here in America, you get a lot of public opposition to nuclear power from some environmental activist groups. It's much stronger in Japan, and they're the ones that'll say, "Hey, we've got a real reason to be concerned about this." It's not just theoretical in Japan, so people feel it very strongly. But you know what? I met with some college kids there, and they were super pro-nuclear kids. In Japan, they called themselves nuclear youth advocates. I'm still working on a story about these guys, but they were just really enthusiastic. And I'm like, not everyone in the country feels this way. And they're like, oh, we know.
Are these kids like, maybe they're 20, 21 years old? So back in 2011.
Right. They were in grade school. They remember it.
So they remember it. But okay, that's interesting.
Yeah. They were like, I remember when my dad put on the TV when that happened. He said, this is important. I'm like, okay, but I wanted to watch my anime.
And then, culturally in South Korea, did you feel like there was a stigma, or there was generally there was more acceptance of
absolutely
energy?
Yeah, I mean, Korea still gets, I think, is it 60% of its power from fossil fuels? Mm-hmm. And Japan, it's very heavily fossil fuel powered as well. So they're really conscious that if they need to get carbon emissions out of their power system, nuclear is one of their few options.
Will, we're glad you're back. It sounds like you had an amazing trip. You didn't bring me any goodies, but that's okay.
Sorry.
That's okay. Next time you're gone for 3 months.
I brought some
Sushi
goodies,
on the plane.
but the rest of my team ate them last week.
He brought goodies, but they've been eaten. Check out his story. It is today's big take. It's on the Bloomberg terminal. It's written along with Hee-Soo Lee. It's all about the winner of nuclear's $9 trillion comeback. It'll be South Korea. It's a Bloomberg exclusive. This Bloomberg Businessweek analysis, it's pretty awesome. Check it out. It's on the terminal and at Bloomberg.com.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Plenty ahead in our second hour of the weekend edition of Bloomberg Businessweek, including the CEO of Omaha Steaks on the business of beef and serving up a sizzling romance novel to sell even more.
Plus, how about wine with that steak? Our Bloomberg Pursuits team on building an all-American wine cellar in the time of tariffs.
Also, the movie with a fresh look at an age-old conundrum. Is it better to be with someone for love, for money? It's all in Bloomberg Pursuits. First up this hour, though, we wanted to think about kind of where we are in time and how it's been 5 years since the killing of George Floyd that sparked widespread attention to systemic racism in the United States.
At first, many companies publicly pledged support for racial justice, but since then, we've seen a pendulum swing on the way that companies talk publicly about this stuff. Mark Morial is president and CEO of the National Urban League. Mark joined us to discuss corporate racial equity, but first, he weighed in on the tie-up between U.S. Steel and Nippon Steel.
We took a position against this transaction, and I think people should be reminded that both Biden and Trump during the election cycle opposed what in effect was an acquisition by Nippon Steel of U.S. Steel. Cleveland Cliffs wanted to buy U.S. Steel.
Right.
Both Biden and Trump opposed it on the theory that it would lead to the loss of American jobs. The fear being that Nippon would close American plants, transfer production to Japan. So now with this iteration, you asked the right question. Is this a partnership, or is that a public relations move? Is it still the original deal, which really was an acquisition? And what protections are going to be there? We took a position from a jobs perspective. So
you were concerned about some of the black communities there, right? In
Gary,
terms of
Indiana, and a number of other
impact.
places, and steel, and we're in a conversation where we're talking about manufacturing. So the real impact question is, will this protect American steel jobs, or will it potentially lead to the transfer of production to Japan?
Well, I will say the president said that it would create at least 70,000 jobs and add $14 billion to the U.S. economy, but he has a hard time imagining that after investing $14 billion, then Nippon Steel would add an additional $14 billion to the U.S. economy.
And the question is, are there any guarantees? And I think we all need to watch for the details, understand the specifics, because those jobs and those communities have been heavily dependent on those types of jobs.
Well, just to contextualize the 70,000, that's just a massive number of jobs, especially for the steel industry. U.S. Steel only has 22,000 employees right now.
Yeah, and I hope it's not a lot of hype, and I think that we owe it to look at the transaction and see what impact it'll have, what guarantees are going to be there for American workers, and what are the guarantees that 5 years from now, there's not a decision made, a reversal, and the jobs move to Japan or they move abroad for some reason. So that's really what, if you will, handcuffs and guardrails are going to be placed on this transaction. Until we see what they file, until we see what they promise, it's hard to know. But it's interesting that the president opposed it as a candidate. Biden opposed it as a candidate. Union opposed it last year.
Right.
And there was an American suitor for U.S. Steel, Cleveland Cliffs, right? So there's a lot to unpack here. And I just, we work hard on the issue of jobs.
Right.
And we're very focused on transactions to determine whether it's going to have a positive or negative impact on the communities we serve.
Well, look,
you want to talk George Floyd?
Well, wait,
I do want to in a minute.
Yeah, right.
I want to
stay with this for a moment.
Stay on economic development and stay
yeah.
on jobs, because as somebody who's been involved in government for so long, mayor of New Orleans, serving in the Louisiana State Senate, you understand this stuff. When it comes to economic development, take a big picture approach to what you view as the economic policy of the Trump administration and its effects on American jobs, because the president and the administration would say, hey, we are imposing tariffs to protect U.S. jobs.
I think a tariff approach without an industrial policy, which says what specific industries are you trying to grow? It appears to be a scattershot approach designed to leverage some deals without any specificity. So we're talking about iPhones, automobiles, blue jeans, toys. What specific? So I can buy the selective use of tariffs, the selective use of trying to rebuild an American industry, but you need an industrial or economic development policy that matches the tariffs in order to give certainty to American business and consumers.
So I am curious, Mark, when the president putting pressure on a company like Apple to kind of increase its investment here, and we've talked a lot with our reporters who cover it and our team that covers it, that they say, it's going to be a while before we can do it, that maybe there isn't the skill of the workers, the type of automation, so on and so forth. But is that the kind of thing that you think would create jobs that would actually benefit Black communities, middle-class communities, which we have just kind of carved out in a big way?
Look, the outsourcing of jobs that took place in the 80s and the 90s to really Reagan-era free trade policies, which were continued in the Bush and the Clinton era.
Republicans, Democrats alike,
communities, right? They did damage communities. The benefit was cheaper goods on the consumer side.
Right.
So there were some benefits, but it hurt. The issue today is what jobs are the jobs of the future? Is it rebuilding automobile component parts? I would say that what people have not paid attention to is the disinvestment through the NIH cuts in biomedical research and technology, where we do have a bit of a competitive advantage, we ought to be pouring more investments into that.
What's the impact of that from your view?
Well, the impact of that is long-term damaging, because what happens is the scientists and the investments go abroad. And once they go abroad, just like manufacturing, you can't get them back. So our economic policy ought to be focused on where do we have a bit of some tailwinds and how can we grow it? But then on manufacturing, I agree with the notion that we ought to try to rebuild manufacturing, but we need to be more specific about it. If someone said, I want to bring jobs to Detroit, Newark, Gary, New Orleans, Atlanta, I'm all for it, but I need some specificity as to how this policy is going to generate that type of response.
Are you getting time at the White House?
We've not been in any direct discussions with anyone in the administration, but as always, if it's about the benefit for the community, I'm open to discussions with anyone.
Is that different than other administrations? Do you typically have a direct line to the White House?
In the Clinton, the Bush, the Obama administrations, the Biden administrations, I think there was a much more candid, open working relationship with civil rights leaders, with African-American leaders. And they were frank and candid, and they were not performative. You see, many of these meetings took place without cameras, without press, without performance, without posturing. So, my view of meetings is I want to talk business. I don't want to play games.
What's interesting is the communities that you represent at the National Urban League in the last election moved further to the right for the most part. And I don't want to paint every community with a broad brush.
And many didn't vote. And there was a cynicism about whether government can make a difference. And
why was that?
I think that people's objective economic conditions the difficulty of COVID, the depression of wages, inflation, a whole host of factors, and the idea that politicians come and go and make promises and never keep them.
So how does the Democratic Party get these voters back?
It's going to be up to a specific candidate. I think people will rally around the right person. I don't know if it's so much about a party. Think Trump, right? Trump remade, quote unquote, the Republican Party. I think the Democratic Party is, the Democratic coalition is poised for a makeover. It's poised for a group of people who are going to come and talk about how they're going to change and disrupt, but build a vision for the future.
So who are some names that are on your mind?
I wouldn't offer any names now, because right now the horses have not gotten out of the stable. So we got to see them on the practice track.
Well, was Kamala Harris the wrong candidate at the wrong time?
I thought she was a good candidate. She was given a tough lane to run in, 60 to 90 days to get known amongst the American people. But remember, she came within 1 point of defeating someone who was on their third run for president. So we got to remember, there was no landslide, there was no mandate,
right?
But there was a victory for Donald Trump.
So I would love to say, speaking of victories, that we've made a lot of progress in the last 5 years, considering the tragic killing of George Floyd. And I think, it was COVID. We were all home. We had a lot of conversations, really frank and real, with CEOs and leaders about the importance and the racism that still is in this country, and Blacks being targeted around the country, and just the injustices. And I feel like we've slided back. Tell me how you see it.
5 steps forward and 3 steps back. On 2 issues we cover in this report, I encourage people to go to NUO.org.
You guys have a report out, yes.
On policing, many communities, many police departments, many cities, supported by the Civil Rights Division of the Justice Department, made strides. We didn't pass a comprehensive federal law. The George Floyd law did not pass, but 180 police officers were in fact convicted. Dozens of police departments ended up in agreements to reform themselves. A number of states like Maryland passed statewide police reform measures. That was good. Now, what's the obstacle now? The current administration has walked in and said, we're freezing all civil rights investigations, regardless of merit, regardless of the basis of those. That puts headwinds into this effort to continue to do reform. On the other hand, there were these incredible commitments by many great American institutions, businesses, philanthropies, et cetera, and now some are walking them back. And there are 3 categories: those that have just abandoned them, some who've held firm, and those that are making cosmetic changes because they know they need to be committed, but they're under the pressure of the administration, which is using its regulatory power to force their hand.
Do you think, which one do you think happened more? Do you think these are just cosmetic changes and they're committed to these so-called DEI policies? Or do you think they are actually making fundamental changes and moving away from them? And look, it depends on the company, obviously.
I would encourage American business to demonstrate a sense of courage. And the reason why that courage is important is to recognize the marketplace for both employees and customers of the future, which is becoming far more diverse. Black, brown, Asian, women. That's the workplace of the future. But people today, if you look at DE&I, diversity, equity, and inclusion, equal opportunity, and you poll it, the lowest polling numbers I've seen in any publicly available poll is 50%. See, the American people are not on the side of the loud anti-voices. American business knows deep in their soul, they know and they understand, but they're being, I think, pressured. They're being intimidated. And I think that's just the reality of today.
We're squeezed for time, 25 seconds. Are you surprised by the fear of corporate leaders to speak out? And I apologize that it needs to be quick.
I am, but there are exceptions. Jamie Dimon, Roger Goodell, 2 people with whom I've spoken and 2 people who've made important statements. And I think others should do the same thing.
Are you done with public service?
Never done with public service.
So is there a chance you would run for something else?
There's always a chance. But I love my job. I love what I do, but there's always a chance.
Like what?
Stay tuned.
All right, TBD. We'll come back and tell us. You can break it. Mark, thank you so much. He's, of course, President and Chief Executive Officer of the National Urban League, joining us in studio. Mark, thank you.
This is the Bloomberg Businessweek Daily podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business App. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
1 week ago, last weekend, it was Memorial Day weekend, considered to be the official start, I guess, to summer.
Unofficial, because June 21st.
Okay, all right. Technical. Anyway, unofficial start to summer in the United States. With that, perhaps you were one of the millions of Americans who took that long weekend to celebrate with some outdoor activities, beach trips, or spend some time grilling up some steaks. Didn't you do that, Tim?
We didn't grill steaks. I was with a group of people who don't eat mammals, interestingly enough. That's the way they think about it.
Okay, but Tim and I both like steaks. I think it's
so. We
safe
had
to say.
chicken. We had chicken. We had turkey burgers. There were a few Impossible burgers for the actual vegetarians. I had a lot of chicken and turkey burgers, though. Nate Rempe hopes you were grilling an Omaha steak or several. He's president and CEO of the privately held company, more than 100 years old. The company is. Nate joins us from Omaha. Nate, good to have you with us. It's good to have you on the program. We've been excited to speak to you about a range of topics. I want to start just with the fact that you're privately held. You're more than a century old. We don't have a lot of numbers to go on. We are Bloomberg. We need some context here. What can you tell us about the business, sales, what direction they've been going in? What can you share with us?
You bet. First off, in Omaha, we grill no matter the weather.
Okay,
so
it's good to know.
Get that right out of the chutes. So we are 107, almost 108 years old, born and raised in Omaha, Nebraska. We're pushing upwards past 600 million in top line revenue, about 2,000 employees, and we spike up to about 6,000 during the holidays when we provide America, the best gift, which is Omaha Steaks filet mignon.
So where is the beef coming from? Because on your website, I noticed you do have a section, sort of the higher end stuff that is imported from Japan, right. It seems like. Other than that, is it all from the United States?
It's actually, our Wagyu is not imported from Japan, actually. We actually call it Wangus.
Oh, okay.
Which is largely in the United States. Most of the Wagyu consumed is a sort of a hybrid between an Angus and the Wagyu.
So
breed.
Forgive me, is it still considered Wagyu if it's not from Japan?
Oh yeah. Yeah, for sure. Just because of the breed, you sort of interbred that with the Angus to get a more Americanized version of that. But our beef comes from the heartland. I mean, I'm talking to you from Omaha, Nebraska. This is beef country. And, on the top of mind lately, has been the topics of tariffs. And when you source all of your beef from the U.S. right in the center of the country, you can really have a competitive advantage in protecting your customers from the impacts of things like tariffs. And Omaha Steaks, given the fact that we're 100 years old, is super vertically integrated. So from the sourcing of the raw material through manufacturing, packaging, marketing, IT, all the way through fulfillment and logistics, we control that at every step in the process, and that gives us a couple benefits. One is that customer experience can be very controlled to ensure that we have an absolute fabulous experience from not just from first bite, but all the way backing up to the shopping experience, the marketing experience, exploring what products you might want to enjoy from Omaha Steaks, all the way through to when that cooler shows up, perfectly frozen with ice still in the package.
All right, Nate, I got to ask you, because I feel like every time we go out for dinner, you want to buy, I'm using steak broadly, but there's obviously different kinds of cuts and so on and so forth. But it's expensive. You're talking 35, 40, 50, 60. Why is it so expensive? And I was just looking, beef prices have gone up again this year, or they're up. So what's going on in the beef market?
Yeah, it's largely, it's pretty simple, Carol. It's kind of supply and demand. So consumer demand has really kind of stayed strong despite all of what's happening around us in the macroeconomic environment, cattle supply has dropped. In fact, we'll be about 4 million head lower in this year versus 2022. And thus, price is sort of increasing. So, all those factors are really what's behind the price of meat increasing because, the cost of food has been increasing for quite some time. It's not just, kind of this, very recent event. And,
Right.
and going out to dinner, when you told me, you go out for a steak, I think if you think back to 2020, one of the things that we learned as a country is how great it was to have dinner at home with family. And that, when you do that, that doesn't mean that the experience or the quality has to drop.
Right.
And what I'm arguing is that I can bring the quality and the guidance and the experience of the best steakhouse in America to your kitchen. And you can do it without waiting in line, without driving, without tips, without, maybe variable service. And you can be the hero in the kitchen as opposed to the steak restaurant.
As long as you don't overcook it, which has happened.
Well, it depends. I mean, we say it on my steaks.
Medium rare
As
on the
long as
rare
you're eating
side.
steak.
Totally.
Well, to Carol's point, beef prices recently, just in the last few days, reached a record high in April. How much of your price has gone up over the last year?
Actually, we have held our prices static for about 3 years. And again, we're doing that because we're able to control, and I can't really overstate how important it is to control the controllables. I mean, when you're operating a large business, things that come at you from the sides that cause impact to costs are ultimately what drive consumer price up. So we've been able to really control our controllables and offer that benefit to our customers. Now, there really are a number of things that America can do to manage their costs of protein. It's like anything else in economics. There's a trade down opportunity. So if you were maybe used to having a Tuesday night filet mignon, we've seen some Americans go to the top sirloin. I happen to love the top sirloin. I think it's an underappreciated, maybe underloved steak.
But
it's a Tuesday night steak. It's beefy. It's very healthy, more lean. And so there is a trade down happening there because protein really is an important component to our diet and is a key cornerstone in maintaining a healthy diet. And so trading down is one of them. Like I said, eating at home is another. Investing in products that have that high quality, but still that experience at home can be a great one.
All right. First of
One
all,
thing that I think,
wait,
go ahead.
I was going to say full disclosure. We cook a lot at home, so it's not like I'm eating out all the time. I'm just kind of blown away by the costs on menus. But the same thing, even when we, buy, it's just kind of expensive. Why are herds down? You said herds in the U.S. are down by 4 million heads, lower than 2022. Why is that? Is there not the land?
Number of factors.
Yeah.
Number of factors, Carol. Things like drought, the environment in which the cattle are being raised certainly affects the size of the herd.
Right.
But another phenomenon that's really interesting that I think you'll also find interesting is something called heifer retention. So when demand for beef is high, there is motivation to harvest the female animal as opposed to leverage that animal to generate more herd. And over the last number of years, that has been happening. And so as heifer retention drops, the number of calves entering the market or entering the environment drops as well.
I see.
And so the build of the herd doesn't really happen over time. And we've been dealing with that reduction over the last number of years, which is a contributing factor to supply and thus price.
Nate, you also, it's known for steaks, but you guys also do chicken and pork, seafood, you do desserts, wine, gifts. Some of your seafood is imported from outside of the U.S., correct?
It is, yes.
So how have you been, like Argentinian shrimp, for example, how have you been able to control prices there? You say controlling the controllable is what's important, but how much are you getting hit with tariffs on that stuff?
There's a little bit of that there. I tell you, one of the benefits you get from being a multi-decade business is we have multi-decade supplier relationships. And so, we can have conversations with them, and we can talk frankly about the fact that, the Omaha Steaks and, inter-supplier name here, this is about the long term. We've been sourcing from you for 20 to 30 years. Help us overcome this blip. And a lot of times we find that our suppliers will step up and help us keep those costs in check. Largely, I think, we've done a pretty good job. My team has done a fabulous job of anticipating the impact of tariffs there.
All right. While we have you, can we talk about Nick and Kate, or should I call it Nate?
Sure.
Tell us about Certified Tender. It was a romance novel. I believe it started as an April Fool's joke.
What are you talking about?
I have to tell you, we were kind of reading, there was a great article that kind of put it all together. We were reading some of it out loud in the newsroom. This seems like it was an idea that really took off. Just got about a minute or so left here. How successful did this turn out to be, and how did it come about?
It was so fun. We've done April Fool's events over the last number of years, but we had a super talented copywriter internally that agreed to take on writing Certified Tender. So it was literally written by a copywriter here at Omaha Steaks named Michael. And I don't know if you have the opportunity to read it, you totally should. It's got some fun Easter eggs in the book that talk about the history of Omaha Steaks. Some of the names and some of the dates and things correlate with the history of the company, and it just blew up. The book looks great. The content and the creative. It's just a neat, fun way to engage with our customers. And I think, it sort of speaks to the culture and the innovation and the desire to have fun at Omaha Steak.
That Meet Cute collection, because this was a promotional material for...
That's MEAT.
MEAT, Meet Cute collection, $99, date night themed box, filet mignon, fries, Cabernet Sauvignon. 20 seconds left here. How successful are those?
Hugely successful. It's who doesn't want to have a date night? It's the perfect date night. Have some wine, have some great Omaha Steaks. The filet that we provide our customers is unmatched. It's literally certified tender by the USDA. So it's about the most tender steak you can buy. And then you curl up with a good book. And that book just happens to be by the company that provided the steak and the wine.
All right. Come back. We got to continue this conversation. Nate Rempe, President and CEO of Omaha Steaks.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business App. Or watch us live on YouTube.
Building an all-American wine cellar in the time of tariffs, an upcoming movie that puzzles through matchmaking math, and the Tony Award-winning producer focused on improving the theater-going experience right here in New York City.
It means we're talking Bloomberg Pursuits. We got pretty much our favorite person in the world with us right now, the editor of Bloomberg Pursuits, Chris Rausser. Chris, it's been a day.
Yeah. Mm-hmm.
Which is why I want to start with wine. And we should note that
let's do it.
We don't even drink.
Yeah.
But I think I need some wine right now. I love the concept here with the way you did this package, because the whole idea is we're in this really complicated tariff regime, and it is affecting imports of wine and spirits. So the challenge, if we're up for it, is to build an incredible wine cellar only based on American wines.
After we stop crying.
Yeah,
so go
exactly. So we don't know where the tariffs are going to end up with European wines and luxury items. But when we were talking to Ellen McCoy, our wine columnist, she and I got into a discussion about what is the root question, actually. Because when it comes to luxury items, things that you don't need that have tariffs on them, it's really Trump is asking you to consider whether you can meet all your desires just based on stuff that's made in America. And okay, so let's follow that to the conclusion. Can you make a great wine cellar just using American wines? The answer, is that it depends. Alan really believes in terroir, And the joy of collecting wine really is related to having a wide variety of wines. Wines taste good because of the terroir, which is a combination of the soil and the ground and the environment and the hands that went into making it. That's what's beautiful about wine. It's not just a glass. It's so much more than that. And to limit yourself to one country or one region really limits the possibilities for you. However, are there a lot of great winemakers in the United States? Yes.
Before we get into that, I think about, Tim, like all the conversations that we've had with folks that have come on from around the world, winemakers. And part of the things that we always get into, and it strikes me, Chris, is that how they make it, how they talk about the earth. They talk about, regenerative farming, like doing things. Like it is such a big part. They talked about the impact of climate change. So I totally get what you say, that, right? It makes a difference in terms of the wine that you ultimately get.
And there's so many different kinds of grapes. There's grapes that you've never heard of. Like the major grapes in the U.S. are grapes that have been imported from the major collectible wines in France, basically France and Italy. And so, like Cabernet, Chardonnay. And there's so much more than that. But Ellen does have a range of wines that she really believes are super investable from the U.S., from Chateau Montelena to Littorai to Ridge Vineyards, which is sort of her number one.
What's the sort of geographical range in the United States? Because one point that her piece makes is that there's been a lot of growth in the west of the United States, even in the East, here in New York State, when it comes to wines that are being produced over the last few decades.
There has been a tremendous amount of growth in wine outside of California, Oregon, the places that you sort of traditionally think of as American wine growing. However, like even Texas actually has a big growing wine population. But the really like investment quality wines are still in California, in Oregon.
Yeah, I mean, the 7 U.S. wines for a starter seller that she includes in this, a lot of them are in California still.
Yeah, and a lot of wine is about perception. It's like any kind of alternative investment. It's about history, it's about reputation. And so the Chateau Montelena, for example, the Chardonnay there is the one that won the famous 1976 Paris tasting where they put American wines up against French wines.
That's
and
cool.
It's still dominant, but it will always be a legend because of that.
Not so expensive either, like relatively speaking.
Yeah, not so bad. Some of these are not, $75. Some are,
hold on, guys.
Some are more
All
than
right,
that.
I'm just going
Some are $455.
Not a flex, but I'm going to be telling you, my husband and I just were talking about Opus One because it was like, when we went to Napa, that was one of the places we visited and tasted. But we also, like many years before the child was born, like remember having this dinner and buying a bottle of Opus and Opus One. It was
so let me
really
get this
lovely.
straight. You had homemade French bread croutons last night.
With escargot.
I did
not
you're
have
talking
an
about
Opus
One wines too?
Yeah. Well, but some, like again, pre-kid, there was a lot of stuff that went on.
Yeah, I know. We all know.
A very good bottle of wine. So you're saying we can do it. We can find stuff in America.
You could make a very strong cellar that you will enjoy and love for years. Can you make a comprehensive one that really gets at all the joy of wine collecting? No, you can't.
All right. Can you find a relationship where you're in love and there's also some money involved?
And Pedro Pascal is in there as well.
Not a great segue, but there I went.
Let's talk a little bit about this new film from A24 that's highlighted in Pursuits.
Yeah, so Celine Song is the director of Past Lives, which is a movie that a lot of people really loved. And for A24, she has this movie coming out in June called The Materialists. And before she was a director, she worked at a matchmaking service. And she was really kind of blown away. But she was young, she was sort of impressionable. She was blown away by how transactional people were when they were looking for mates. And it wasn't even really like, I want someone tall or, I want someone nice. It was like, I want someone between 6'2" and 6'3" who has at least $10 million in the bank, who does this kind of finance job. It was very specific. And, I think a lot of us don't realize that like people, when it comes to transactional matchmaking, like that's happening. People can be really specific with what they want. And this movie gets into the idea of like, maybe that's not so bad.
So enter Pedro Pascal and Captain America.
Yeah.
Two different ends of the spectrum when it comes to who they play in the film.
Yes, exactly. So the movie centers on Dakota Johnson, who's working at a matchmaking service, and she's very good at it. She has a string of marriages under her belt. And she has a couple of guys come into her life. One of them is her ex, who is Chris Evans, who is a struggling cater waiter and actor, obviously looks like Captain America. And then...
checks off a few boxes there.
And then Pedro Pascal wanders into her life, and he's a billionaire who just wants to treat her extremely well and take her out to omakase meals and have her sleep on frette sheets. And she has, somehow a hard time choosing between the two.
Checks a few boxes there.
Yeah.
And we should note it's not like a cut and dry sort of situation here. It's complicated. There's some nuance, and there's also some historical precedence when it comes to the storytelling.
Yeah, so a lot of times the movie value system in romantic comedies will reward following your heart, and that is often away from the rich person. Or, like in You've Got Mail, they sort of found a way for Meg Ryan and Tom Hanks to end up together in spite of the money. And in this case, Celine Song saying, you know what, that can be part of your decision. You can decide based on like what your lifestyle is going to be like. And, it's not necessarily a bad thing. It's just, you can always go back into the marketplace if it doesn't work out.
I love it because there's kind of a practical side to it. Like, okay, so what do we need? What do I want? That's going to make, and we all could probably, agree that a relationship is good for a couple different reasons.
Yeah, absolutely.
And so you need to kind of think about it. I love kind of the pragmatic aspect of this, right? Although I'm a romantic at heart, so I'm just going to leave it there.
Hey, let's go from screen to stage. I love this feature that you have in Bloomberg Pursuits, Chris, about somebody who's really trying to reinvent the Broadway experience. Greg Noble, tell us about him.
So Greg Noble is a producer who runs a company called Seaview Productions, and it's partially owned by Sony, and it has done a lot of really big productions. So currently they have Good Night and Good Luck, which stars George Clooney. Mm-hmm. Tickets are now like upwards of $800 per seat because of dynamic pricing. It's up for like 5 Tony Awards on June 8th. So he's mastered kind of these big shows. He did Romeo and Juliet with Rachel Zegler and Kit Connor. It was like totally sold out. All of Gen Z wanted to go see it. But what he's doing next is he's actually building out a small theater where he's going to do small shows, just like under 300 seats. Tickets are going to be like $79. And he's going to start working on small shows to try to develop stuff that can go on to be bigger.
I don't understand how you can, from a pricing perspective, if a traditional Broadway show that right now, yes, it's the hot show of the moment, Good Night and Good Luck, and George Clooney's in it, how can you go smaller but still have it be an affordable experience?
So it takes a lot of, you mean how does the producer go smaller? Yeah. So it takes,
how does it attract shows if there are fewer people who are going to see it? Because as you note in the piece, this oftentimes is a money losing prospect for people who back these financially.
Yeah, if you invest in a Broadway show, you really only get recoup or get your money back about 20% of the time. So it's like not a good investment. But it costs a ton of money to go on Broadway because there's union costs, which are quite high. The week-to-week running costs of a big show with a cast and a creative crew, it can be quite a lot. And so they're capitalized at, $10, $20 million. A musical will be $20 million. Good Night and Good Luck is $10 million. The first show at Studio Seaview, which is Greg's new theater, is called Angry Allen. It's by a kind of lesser-known playwright starring John Krasinski. It was capitalized for $1.5 million. That's way less. And that means that's like a totally different scale of what you need to earn back. And there'll be low price tickets, and then there'll be tickets more than $300. And Greg believes that both of those audiences should be in one place.
I kind of love it, right? It's almost like an incubator, or right, just to play around with some stuff. Maybe see a celebrity, but I love the idea of a smaller format, right? It kind of is cozier.
Yeah, and Greg's thing is it's a bad experience to go to the theater. Like, everyone's in line, it's probably raining, you get in there, they're kind of yelling at you to look through your bag, and then they shove you like a glass of wine in a sippy cup, and so it just doesn't feel great, and you're spending so much money on it. And so Greg's building out this like cute theater with a bar where it's going to stay late, open after shows.
Where's it going to be?
It's on 43rd and 8th.
Okay.
Yeah, it's right near Times Square. And it's just going to be like a vibey kind of place to hang out. It's an old theater. It was a nonprofit theater before, where a lot of really cool shows have been.
Just something about this dude, because it sounds like since he's a kid, he's been like moving towards
Greg
something.
has the best story. When he was a little kid, one of his friends was diagnosed with terminal cancer. And so he started a lemonade stand selling lemonade to fundraise for research. Yeah. And one day, he was like a theater geek, and his friends were, he was like, what if we start putting on shows and selling tickets to fundraise? And then they did it for years and years, and they raised $200,000. These kids from like fourth grade.
It's amazing.
And that's how he was like, wait, I could be a producer. I could do this for my life.
And here he is.
Yeah.
Good stuff. More details, so much details in this story. So highly recommend you check out this story by our own Chris Rausser. And that is Chris Rausser.
He's the editor of Bloomberg Pursuits, also our favorite guy.
Oh, you guys.
Catch these stories on the Bloomberg and at Bloomberg.com/Businessweek. Also, in the June issue of Businessweek magazine that's out on newsstands on June 10th.
I'm serious, Chris. Like, Tim and I were pretty cranky. Like, as we kicked off our day today, you walk in and we're like smiling and having fun.
You guys always make my week.
Aww.
The whole week.
Well, thank you. And that wraps up the weekend edition of Bloomberg Businessweek from Bloomberg Radio. From Chris, me, and Tim, thank you so much for joining us. Have a good and safe weekend, everyone.
This is the Bloomberg Businessweek Daily podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business App. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.